Hey, gang, do we have audio and video? Sorry, I think my platform was acting up on me. I think we should be good to go. All right, there we go. My apologies. Lorna just slacked me and said, "Are you talking to yourself?" So, all right, I think we're good. All right, yeah, my bad. We're good. All right, let's go through the questions. Good morning, everybody. Good morning, good morning. All right, so let's get into it. We had a question about XLF. Let's start off there and take a look at XLF. All right. Yeah, I was having some tech issues. Thanks. No, it's just my platform. It's just my platform. I'm on a platform where if the live doesn't take, clearly then I don't go live with you all. So thank you so much for sticking around. My apologies. All right. So are we setting up an XLF? Yes. Yes. Thank you for the question. Battlehawk, we are. We are. And let me tell you where and why. Let's start off with number one, double green. Number two, the wave uptrend. Number three, 21 propulsion. So all of this tells me that this is a viable dip. Then we focus on what? Well, how far down into the wave am I willing to wait? And I would say 34 EMA on the close. 34 EMA on the close is what I would focus on. So you've got this 34 EMA that we've sunk to before. Love to see that happen again. Where we are right now is valid, but I would consider that aggro. Now, when I call something aggro or moderate or conservative, what I am talking about is whether or not I want you to go in with a small position size, scaling in maybe 25% of your budget for the trade, or whether I want you to be down at the conservative, where oftentimes we're going to be as little as 1/3, but as much as 1/2 of the budget for the trade. And this is something that if you're a member of Sector Secrets, you know this is the way we do it. We scale in, we scale out. I had a video on this. If you haven't checked it out already, and you're on the Simpler Trading YouTube channel with me right now, check out last Friday's Scale In, Scale Out free video. It's a free video, okay? The free videos are fluff free. I get right into concepts that I teach in the futures room and the options room and the Sector Secrets mastery using the tools that you see on my screen. And so what I would say is you're going to go about 1/4 in this area. If you want to go at all, I would start to build the more sizable position, maybe just jumping in with 3/4 down in this area. Now, remember, one of the easiest ways to control risk is to simply place the bulk of your entry closest to the point of validity for the trade. Where is the trade or the trend no longer valid? And the closer you position to that, the lower your risk, because your exit is in very close proximity. Think of it this way. Risk is very simply the distance from your entry to your exit times the number of contracts you have. That's really the most basic way to think about risk. And that's the way I scale in, keeping that in mind. So thank you, Battlehawk, for the question. That's what I'm looking at going forward. And Heather, 37.74, middle line of the wave, perfect. You got it. Excellent. Now remember, as XLF is sinking, you can also keep in mind other stocks within the XLF that are worth taking a look at. Now, what do I mean by that? I'm talking about what are the other heavily weighted stocks within financials? And are any of them relative outperformers compared to XLF? Are any of them sinking down into their respective pullback zones? This is very much like what we were looking at with, I'll give you an example, and this works in any market. We were looking at XLU, right? But I was also looking at DUK. The UK pulled back, had a nice window for the conservative setup, got long. XLU barely touched our zone. So XLU didn't quite fall into the zone, but a stock heavily weighted within the XLU did. I'll give you another example. XLV. and Pfizer. These are the kind of combination that I love to take advantage of. And David, that question about IYT and CSX, yeah, I think that's a pretty good setup. Not my favorite, but we know that this is not quite a great uptrend. It's pretty vulnerable to still some chop. So what I would tell you is treat this as the pattern that it is. It's a minor low, and if we can stay above the close from Wednesday and trade above the high from Wednesday, you've got the minor low confirmation. Okay. So good stuff. Good stuff. Ian asks, people always say there's someone on the other side of the trade. Well, for every buyer, there is a seller. Always. Take stocks or ETFs or futures out of it and think about, gosh, houses, cars, stamps, whatever you want, right? Somebody has to part with the good because someone's willing to buy it at a certain price. It's where the transaction is taking place that's the most telling. So when I see open interest way out of the money, could there be just a seller? No, if you've seen open interest, that's now a contract. Someone was willing to write the premium, aka sell it, and someone was willing to buy it. So yes, there's always going to be, if the other side of the trade verbiage, which I totally get, can throw you, think about there are always going to be dueling opinions. There's always going to be dueling sentiment. And for every person who thinks this is a breakout, someone else is thinking this is where the resistance is. And that's what makes the market go round. So there's always the other side of the transaction. Always. You got it. Next up is Visa. And the question is it bottom of chop oversold buy zone? All right. So looking at Visa here, sure. Looking at Visa, if we have a yellow, right? The first question, your first question, yes, it is chop. You got it. The second part of this is oversold buy zone. This is where you can use a couple of different tools. You can use a slow stochastic, 21K 3D. That's what I used for a very long time before I met Mr. David Starr and started using the Ready Aim Fire. And I also will supplement, right? One doesn't have to supplant the other. Ready Aim Fire or a slow stochastic is a price-based tool, while my V-score is a volume-based tool. So I'll look at previous lows from a volume perspective and say, okay, where were you here? Okay. We're in that zone, which is basically in the middle of the mean and a +1 standard deviation. So see how we've stopped here in that same area before? So yeah, V-score says yes. And then if I can confirm that with a slow stow or the Ready Aim Fire, right? So now I've got a volume confirmation and I'm going to work in a price. And of course, I also have Darvis right there, my Darvis 3.0 factoring in here. So I've got a pattern, price pattern. I'd like to see a price indicator. I'd like to see a volume indicator. And so that's what I want to see converge on that similar area. Why would I continue to be open to the long side? Lower JT multi row is chop, and we're still north of that all important 200. And that 200 prop, as long as we're above that, we're still in that bullish hemisphere in the market. So good stuff. And I appreciate the question, Ed. All right, moving on. What are my thoughts on BGFV and BBIG? Okay, so let me just first say I have no skin in either one of these games, but happy to look at them. So this is a market that's already starting to accelerate, right? And so what I'll say is, for me, I will not engage the markets here. Is it clearly a buy? Well, let's go through the same process. It's so funny. BGFV is so much like the conversation, George, we just had in Visa, right? I'm going to go through the same exact process because if I can't give you check by check by check process, Rag, is it yellow? Yep. Above the 200. Yep. Immediately, I know it's choppy and I'm able to focus on the long side of the market. Next up, the bulk of what I'll be paying attention to, if I was, would be in this consolidation. Okay. So I will say BGFV is not something that would normally end up on my radar. Again, I'm not in it, but I want to show you what usually sets up before. Now, these look like straight up meme stocks. And if you've got meme momentum and momentum, yeah, if you've got a meme stock with momentum, okay, uh, totally different psychology playing out here. Now, if you want to look at meme stocks, to me, the site for meme stocks, I don't know these folks, but I love this site, is taking a look at the ticker sentiment over at Swaggy, right? And if I want to know what's going on in the world of meme, I'll look at these names. I typically don't like to trade this stuff. I like to trade more the names that are in the passive investing universe, and I like that boat's tide. Now, every now and then, if I do want to take a look at a meme stock, I've got to build a watch list first. I want to make sure that the meme makers out there and the volume that accompanies them, the watch list building for me goes right over to that Swaggy stock, and I'm going to take a look at that ticker sentiment. That's what I look at. And then if any of these names have a setup, then terrific, right? I noticed Wells Fargo's here. That's going to get my attention because that's something that's within my XLF, right? Take a look. The Qs are in here. Apple is in here. Amazon, Tesla. There's some really interesting names in this group. So if you are looking at some, I remember when we were trading stocks within the steel ETF and CLF, which had a legit reflation ETF passive investing setup, and then ended up on this list. And all of a sudden, it entered memedom and just accelerated, went parabolic for a brief period of time. But you have to keep an eye on this watch list. It's quite frankly no different than watching something enter and exit the IBD 50. There is going to be a tension there. That's the way I would look at that. So I know that doesn't completely answer the question about what I would do with BBIG, but there's nothing I would do with BBIG until it pulls back. And even then, I've got to make sure that there's a specific kind of attention on it, right? If there is high short interest, great. But high short interest alone is not a setup. High short interest is the fuse. You do need someone to spark it. You do need it lit. So to me, Swaggy is where I know, that fuse has been lit. There's a tension now. Where the attention goes, I'm going to get those parabolic moves. I hope that helps. Okay, I hope that helps. I did have a great birthday. Thank you, Melissa. I appreciate that. I did. PG, sure. I like XLP. And Procter & Gamble puts us right in the heart of XLP. We have a long position in XLP, so we're very much on the same page here. Melissa, I just went with the tide and not an individual boat, but they're going to move together. So, once again, that green candle, which is what we were taking profits into on XLP, remember, that's not the candle of entry. It's this stuff back in here, right? It's sinking down into the wave. It's narrow candle bodies, right? Little dojis, these narrow candle bodies like this. And then it's the bearish movement into the wave where I want to build the long call position. So look for those dojis, kind of lower volatility. That's a better environment to buy the, look, if you get a sell-off and then a doji, that's gold, right? And that's what PG did. And that's not that dissimilar at all, right? You're looking at a boat. We went with the tide and the sector secrets, and that's how that works. So I hope that makes sense. Sorry, I'm running over. For those of you that want to go to your respective rooms, I had some tech issues and the first about 8-9 minutes. So if you got to head on over to your rooms, no problem. Remember, these charts and coffees, I think we're probably north of 200 episodes at this point. Every single day, Monday through Friday, I'm here with you all for the first 20 minutes before we open up the respective rooms here at Simpler. I'm just going to answer a few more questions, but all the replays are back at the Simpler Trading YouTube channel, so you can check that out at your leisure later on today. All right, and thanks as always for being here and the questions. All right, next is CSX versus, I love this. So, we want to get into definitely that. It's a lot like triage, right? Which comes from the French trier, which simply means to sort. We're sorting it. And, I know in this situation it has a medical connotation, but I like that there is a certain amount of priority given, right? That's the implication to trier, to sort. So we always want to keep that comparison, that relative outperformance, that sorting in mind. I think they're two very different structures. I'd have to say NSC would get the nod from me, mainly because it's the lower risk of the two. This is firmly in sideways action. We did complete the 1, 2, 3. All right. We did complete that 1, 2 breakout, right? And then it sunk back down. And it happens, it does happen. But what I would say at this point is what you have is a market that's clinging, hopefully, to the 200. So remember, you want to keep this on a very tight leash. It's either going to be right very soon or it's going to be wrong. Do not give it a lot of latitude. When you're putting on a distribution fade, we're going to be talking about a fade buy here. Basically in the area that we're in, you do not give it a lot of leash. Here's your minor low. Let's take out the high. That's going to be the opportunity to get long. That's really it. And that would also get us above the 200, which that's really two very important thresholds that we'd be breaking above. So I would say mainly because we can control risk in a very, very tight way. And it is yellow. So it's not as if I'm buying a double red downtrend, not allowed to do that without a 1, 2, 3. This is right there at a very important level. And we have a little bit of a volume ledge helping us out. So again, if you're right, great. But if we take out the low, if we start trading lower through 250.5, just be very aware of that. Have an alert at that level and maybe, cut it loose and just see if you get another cleaner setup, right? But yeah, there is a buy on NSC and I would borderline take that over CSX, not because it's stronger, but because there's a lower risk trade. Both of them are pretty darn choppy, right? Both of them are pretty darn choppy. Okay, so next is Nike. Do I like Nike? Yeah, I do. Since we've gone blue and yellow, let's wait for maybe 2 more blue grab candles, and then I'll look for the long. But this is definitely long only, right? Double green, consolidating. Let's just see if we can't complete the consolidation setup. But if you want to start buying Nike in this area, that is fine. But we really want to see this thing stay above, I'd say 162. Yeah, 162.50, 163.50. We really want to see it stay above 163.50. Again, another great stock to keep on a tight leash. Remember, Nike is part of the consumer discretionary conversation, which is trying to get out of its own way, but it's only going to go where Amazon, right, and Tesla and Home Depot are going to let it. So if you want to know where Nike is going to be going, look at Amazon, look at Tesla, look at Home Depot. All right. So again, thanks for hanging out with us. Couple tech glitches early on. That's why I ran a little bit later than normal. Thanks as always for being here for Charts and Coffee. I appreciate it. Thanks again for all the birthday wishes. Y'all are awesome. I will see you all tomorrow, same time, same station, without the tech issues. Thank you for your patience. Have a good day. Be good to each other. I'll talk with you soon.